Good morning, everyone, and welcome to the MFSA's digital contact session, specifically focusing on data. Today with us, we've got a number of speakers from the South African Credit Risk and Reporting Association from SACRRA, and they will be joining us and doing a presentation to our members. Before we start, we've got a couple of announcements to make of sessions that will be taking place in this year. On the 10th of November, we will be doing our compliance, legislation and regulation session. There we will have representatives from the National Credit Regulator presenting on where we are now specifically with compliance. Then on the 18th of November, we have a digital compliance session, which is for members only. And this will focus on guidance within the industry, specifically focusing on debt counseling and compliance and steps to following specifically in the debt counseling industry. On the 2nd of December, we will have our digital expo where we will have service providers presenting to our members. So everyone is welcome there. Our program for today is at 10 past 10. I think we will definitely work through it a little bit quicker. There will be credit and risk reporting environment overview, National Credit Act and POPI compliance aspects relevant to credit and risk reporting, also SACRRA project updates. Then we will have a question and answer session and a closure. So if you have any questions, please put them in the chat box and we will attend to them. Our speakers for today is Daryl Began. She's the Executive Director at SACRRA. Daryl has been with SACRRA since September 2012. Prior to SACRRA, she also worked for the National Credit Regulator. She has been an independent consultant contracting with the Microfinance Regulatory Council, the MFSA and FinMark Trust. She was part of the creation and establishment of the FinScope research project, and she was a consultant in the industry. Daryl is at the head of SACRRA, and she provides the team and the industry with a lot of guidance. With her presenting is Karika Verber. She's the head of data design, deployment and stakeholder engagement. Karika has been with SACRRA for 12 years and she has been involved in the credit and risk environment for more than 16 years. She was involved with the NRR decommissioning project. She's a member of the project team that designed and deployed the current data specifications. Also, Andrea van der Westhuizen will be presenting. She's the head of programs, finance, HR, and legal. She joined SACRRA in 2016. She's got a number of skills and also was COO at FinMark Trust, a multi-donor funded entity in the financial inclusion research projects. So we want to welcome the SACRRA team. I'm going to hand over to them now. They will be sharing their screen, doing a presentation. And if you've got any questions, please put them in the chat box. So welcome, team.
Morning, Leonie. Good morning to all the ladies and gentlemen in the audience. It's really an honor to join you today. We're very grateful that the MFSA has made this opportunity available for us. And I'd like to just invite the audience to please use this session as a really interactive one. We want to show you how important your data is in the world of credit and risk management. And we'd encourage you to ask questions as we go through the process, please. I also would like to just test a little bit of knowledge and see what our audience knows about the credit market. And you can answer these questions as showed in the screen on the chat box. So starting with question number 1, how many credit active consumers are there in South Africa reported to the bureaus? So look forward to seeing those answers. No cheating, no checking on the NCR website, please. Just let's see who knows about the market. The session, as I mentioned, is to make you aware of data and its importance and your role in it. I'm not sure how much you know about SACRRA, but let me just say that we're a voluntary industry association. As you may have seen in the link, we were established in 1989, and we were initiated by the retailers in South Africa who realized that if they shared information about their customers, they'd all be better off because they'd understand how much to lend to a customer and also whether a customer might be getting into financial difficulty with an alternative supplier. Our vision and mission is simply around the data. We used to have a much broader mandate. We used to look at credit matters, and I think it's just on 7 years ago, we focused specifically just on the credit and risk reporting data. So our vision is to facilitate quality, timely, standardized data to enable decision-making on natural persons and commercial entities. And I must tell you that the information that you report through to the bureaus is actually also used by the government in terms of informing their economic policies, and also Reserve Bank in terms of interest rates, etc. So this credit data is really important. We have 6 pillars that you can see in the blocks on the screen that support our vision and mission and enable us to actually do our function. 1, we keep an eye on all the legal requirements related to data. 2, we try and make ourselves financially sustainable, not only from a financial perspective, but also from making sure that we have a value proposition that our members value and want to support. And we would welcome your input on that. If you think we're missing the pot somewhere, you can let us know. We're very keen to always be of service. So we, as you can see in the 3rd block, actively promote data quality, and we monitor and try and assist. We also are focused on improving our stakeholder relations, and the session today is one of those initiatives. And then we cannot, as with any organization, operate without our team and our office team. So we're quite a small team. I won't tell you the volume of data because I think Karika will get to that, but we have a very small staff complement in the office, and we have a huge task. So we're always looking for good people. And as I mentioned earlier, aside from keeping the appropriate legal structures and effective governance, we keep our eye on the law and try and make sure that we keep our members compliant with the law in terms of the data requirements, but we never actually give you a legal opinion. We always recommend our members do their own research in terms of legal views, but we would set the standards, etc., and the reporting requirements in relation to any legal obligations. So that's basically SACRRA. Very happy to engage any questions as we go through the process, and I hope that you're going to enjoy both Karika and Andrea's presentations this morning. Thank you.
Good morning, everyone. Again, thank you for the opportunity and for spending your time with us today. We really do appreciate it. We are passionate about data, and hopefully we can share some of those insights with you today. Thank you, Andrea. So first of all, as the universe expands, data expands. The more users we get, the more devices that gets connected, the more regulations there are, as I'm sure you are aware, and then that, of course, results in more data, a lot more data. So it keeps growing, the universe keeps expanding. Data, we're getting more data, and we are also looking for more data because data is extremely valuable and can be used in various ways. Thank you, Andrea. So just to give you an oversight of how big is this risk, credit and risk reporting universe. So in July 2021, those are our latest stats. The average submission is about 52.2 million records per month. So that goes to all 6 hosting data bureaus, which is actually 5 bureaus now, but it's 6 databases. So we manage and monitor that quality on a monthly basis. The rejection rate currently stands at about 568,000 records, and the percentage is just over 1%. So in the graph, you can see that I've highlighted, we predict, and we see this mostly year on year, between October and January, there's an unstable period. So we identify there the average number of records according to the information we received from the bureaus. The average does get pulled down a bit because you can see there's an upper and a lower volume supplied there. So if you start averaging it out, you know, you meet in the middle. But at the moment, we're seeing about 55 million records being shared in the market. The unstable period of October to January, we call it the silly season. So people tend to stop submitting data. There's some challenges with people going on leave. And it's really a period of time that is actually critical for the data to be up to date and correct so that we can make informed decisions, because as you know, people are more inclined to go and seek credit in those periods. Thank you, Andrea. Also, just to show you in terms of our membership, how big our universe is, We have got affiliate-led group members, which we work quite closely with. And in there's about 2,881 individual entities. This number does fluctuate because there's a lot of changes and volatility in the micro-lending environment in terms of branches being sold, branches being purchased, merging of branches, new entities opening up. So we see a lot of movement within this space. And this also in a very good way, tested our new systems that we roll out vigorously, because we went through all the options, all the variances to see that the systems actually do cater for those volumes. And you can see the majority of our membership lies within the affiliate-led group members, which is the short-term lending market. On the other side, just for interest sake, you can see how much they contribute to the overall financial position of the association, our annual fees. Yet it's a substantial number of members. And that's why they're also critical and important to us. So even though the volumes of data may be low, the value and the volumes of members are extremely high, and we do really, really, really look at this sector quite closely. Thank you, Andrea. So just in our statistics, we have got an unsecured sector, full members, and then we've got the short-term lending sector, which falls under mostly our affiliate-led group members. So I just wanted to give you more or less an idea of the number of records that we see come in. So for the short-term lenders, the average monthly records that come in is about 10 million. The average rejections is about 51, and rejection percentage for the monthly records is 0.49%. The average number of suppliers that contribute to this data is 3,285. Now, you will see that this does differ a bit from the 2,800 I showed you in the previous slide, but this is where we count on supplier reference number level. So this is per file. One entity may have several files that they submit for different branches, for different products. Then in the unsecured sector, which is typically the larger entities that become full SACRRA members, they submit about 15 million monthly records. It's about 106 entities, and their rejection rate is 0.84%. So in terms of your monthly rejections, you are doing quite a bit much better than the unsecured sector. Also, what I wanted to highlight here is that we've got 6 different account types. So it's not just primarily account type P, which is your personal loans, or your monthly loans. You see a bit more of these variances when you go into the unsecured sector, as some of them offer short-term insurance and some other products within that sector. Thank you, Andrea. So then, what I wanted to illustrate to you here again is just the member count versus the SRN contribution. And you can see that on a 1-month loan, the personal loan, the contribution of members is 2,319 entities that are submitting data. So that is an extremely high number. And that is why we rely so much on our affiliate or our ALG members to work with us, because we cannot reach all 2,390 of these entities individually. So we work very closely with them, and we really do appreciate the support that they have been giving us. And we also encourage you to speak to your ALG group leaders when you've got any data queries or any data issues. So in the 1-month loan, personal loan sector, we have got 2,682 SRNs. So these are individual files. As I mentioned before, this could be because one company has got multiple branches with different trading names. So we then submit different files so that these records display correctly at the bureau, because it's important that that name that they see on their credit profile is actually a name that they recognize, so that they don't log disputes and say, but I don't have a loan with this company, I don't know who they are. So that's why we separate these files into different submissions. On your personal loans, there's about 277 entities that submit data, and that covers about 338 files being submitted. Again, we split the files. It may be the same product. However, for various reasons, again, the display name, different company names, different trading names, that we would split it out. Typically also, we do combine the personal loans and the 1-month loan in one file submission, but where we can, we do separate the files because it's easier to manage the data quality and also get statistics if these files are not combined. Thank you, Andrea. On the monthly account type, what I've listed for you here is just to give you an idea of where you fit contributed from the sector. So those are all our different account types within our Layout 700 version 2 that is prescribed by the NCR. And you can see there that 1 month personal loans is quite a high contribution in terms of the number of records being submitted for this account type. Personal loans, also, it's not the highest. I think it's the fifth highest being submitted. So the volumes of these records for these account types is quite considerable when you compare them to the rest of the SACRRA account types. Thank you, Andrea. Then when we look at the rejections, this does paint a bit of a different story. And it is a bit of a concern because you can see that our account type with the highest volume of rejections is our 1 month loans. And that is a concern to us because the frequency by nature, as it's called, it's 1 month loans, it's imperative that they are correct, that they get loaded. These rejections is problematic because industry who's making inquiries, and I think the last time we checked, it's a few billion inquiries being done on this information. They are not seeing this data. So it's a concern for us, and it will be an area that we are focusing on to bring down those rejections because from all of our account types, they clearly stand out as the highest. Personal loans, also considerably high, something we would need to look at. It's not the highest, but it is also a concern because these are typically your term loans. So if that term loan, if it's a 6 month loan and it gets rejected for the entire 6 months, nobody will see that loan. It won't be registered. People can't take it into account in their affordability agreements, and you are placing yourselves as well as the industry at risk, as well as the consumer, if that information does not get displayed. Thank you, Andrea. Then high level, what we did here is just do a sectorial breakdown in terms of, if you look at the overall contribution to the volume of data percentage-wise versus the rejection, you will see that in the unsecured sector, the number of rejections or the contribution to the rejections is quite higher than the actual contribution to the total volume of records. Again, this is a concern. There's only one other industry where this does happen, which is in the secured banking industry. We are closely monitoring and focusing and working with them to also bring it down. But the next biggest concern would be the unsecured market. We need to get that rejections lower than the volume of data being contributed. Thank you, Andrea. Okay, then I'm not sure how many of you have heard of Project Evolution. So the phase 1 was moving from to the new layout and submitting data through the data transmission hub. There's also a second phase, or what we refer to as Project Evolution compliance phase. So this compliance phase was designed, and Andrea will tell you a bit more about it. It went live already in 2015, where some of these requirements came in. At the time, industry was given about 3 months to get ready to submit data, and we had to find a way to ensure that data contributors can remain compliant while the industry develops for a permanent solution. So in this Project Evolution compliance phase, we introduced what we refer to as interim processes to cater for these anomalies. So on your screen, on the left-hand side, you will see that 75% of our ad hoc files. So an ad hoc file is a file that is submitted outside of the normal process. It has to get special permission. It has to be monitored separately. It has to be processed separately. 75% of these is because industry has not yet developed for Project Evolution compliance phase. So Project Evolution compliance phase, what it entails is overdrafts. We are introducing the loading of overdrafts. That won't affect you necessarily in terms of your submissions, but it will definitely have an impact on your affordability assessments. So we do encourage you to speak to your ALGs, your system providers, loan vendors, to determine when this data is going to come in and how you are going to manage it, because it is going to have an impact on your affordability. Overdrafts also, they behave a bit differently than our normal account types. On an overdraft, you will only see the overdraft granted to the consumer. There won't be any usage displayed. You won't see any installment values. You won't see any current balance, just the facility that's available. Only once that consumer goes into an arrears state on his overdraft will you start seeing balances like the installment value or the reduced reduction. So you need to be aware of that data. We are currently testing with quite a few of the banking banks in the banking sector. So this data will be coming through soon. You need to be aware of it. And the project evolution compliance phase as well, what we've introduced is, no, sorry, Andrea. Yeah, thanks. What we also introduced is mortgage pre-registrations. So in the past, as you're all aware, it takes a while to actually register data at the deeds office. And in that period, we've noticed consumers becoming quite creative in the sense that they would go and apply for a home loan. It gets approved, and then they go and apply for unsecured credit in the meantime, before that loan gets registered at the Bureau. When it comes to the Bureau, they would either go into debt review processes or they would become delinquent. What we've done with Project Evolution, the pre-registration, is at the point where the consumer signs the agreement. That agreement will be registered at the Bureaus. It will be under a separate SRN, illustrating that it's a pre-registration. It's just awaiting registration at the deeds office. Once that's complete, it will move to the normal home loan book. So it's imperative also that you do consider this in your affordability assessments, because that loan has been granted. The other portions of Project Evolution compliance phase that does impact the interim process is the prescription. So if you are in the space where you collect on debt and you get debt interruption, you can collect longer than the 3-year period. The layout under Project Evolution compliance phase allows you to actually submit a code to the Bureau, indicating to say that you have got a legal interruption. We don't prescribe what is seen as legal interruption. That is for you as a company to decide and for you to interpret the law, but we allow you the facility to report on that. That allows the bureaus to update that information so that they don't reject it after 36 months as a possible prescribed account. So you are basically instructing the bureau saying, I have got evidence and I am comfortable, this loan must reflect at the bureau. That is at the moment causing quite a high number of rejections, as a lot of industry members still need to develop for that. The last one that will have an effect on the microlending environment is the selling of debt. So if you do sell debt from one supplier to another, we've introduced a process where it will show on the payment profile line of the consumer, it's been sold, it will show who it's been sold to, and then the party that purchased the debt has to start reporting within 1 month of that debt sale to show, and they will illustrate on their payment profile line that it's purchased debt, and they will show who they purchased it from. That is according to the NCR requirements, that there should be a continuation of the payment profile for consumers where the debt is sold. They cannot be negatively impacted on that. So just to highlight again, interim processes, 75%, we cannot stress enough. Industry needs to gear up for Project Evolution compliance. The NCR is looking out for prescribed debt. It's a concern to them, and we expect that at some point they will start looking at the data to determine that. On the right-hand side, what I've got there is replacement files. So replacement files are typically when something was provided to the Bureau and there was found that there was an error in the data. So then we back out that file at the bureaus, which you can imagine is also a very resource-intensive process. The supplier then provides another file, a new file, a corrected file. So the DQ8, data quality aspect, is 84%. Most of these replacement files are daily files, and they originate from the unsecured short-term lending sector. So we see a lot of replacement of daily files, something went wrong, and we see a majority of that 84% of the replacement files are daily files. They are also quite intensive, they are risky. because if one bureau loads the incorrect file versus another, you will get disparate data between the bureau. So we need to closely monitor that and make sure that we load the correct data. Thanks, Andrea. So in terms of the daily file submissions, and this is an area where we wanted to specifically draw your attention to certain aspects. So currently, of all the daily files or daily records that are being submitted, about 49.5% are registrations and 50% is closures. So keep in mind, these are your daily files that has to be submitted within 48 hours of the transaction being taken place. So it's either the opening of a new account or a closure. This is critical with 1 month loans because it's often, if it's a weekly loan, it's a registration closure. It can come in 4 times in a month. The concern that we've got here, thanks, Andrea. And this is where we are raising the danger sign, the warning sign, and we are putting a flag up to say there is problems. 22% of daily records are currently being rejected. And this is just in the unsecured and just in the short-term lending environment. So specifically to your environment, 20% of your registrations are not being loaded. 25%, that's almost half of your closures are not going through to the credit bureau. If a registration does go through, but that closure gets rejected, that record will remain there, not updated, and we refer to it as a QE1. So that's a record that hasn't been updated for 60 days from the last load. And that is something that the NCR is also monitoring. If your QE1 records becomes higher than your number of records in your monthly file, you are at risk to be in terms of compliance. So this is something that we want to call upon you to please look at closely, work with your ALG leaders. We will work closely with them. We are there to support you, but we need to get these volumes down. If you think about monthly loans, weekly loans, open, close, there's a lot of data that's missing. And this data is critical, it's important, it's very predictive. If you look at all the billions of inquiries being done by the consumer market, it's quite a big chunk of data that we are missing, that's not there, that's never reflected. So this is something we will be focusing on. And this is something where we really want to raise the red flag and say we need to address this because this creates a massive compliance risk. The NCR is quite strict on the 48-hour reporting. So if they do start picking this up, this will be a problem. So we really want to draw your attention to that. Thank you, Andrea. And then just a summary and some of the targets that we will be looking at and focusing on. So timely, accurate data submissions. As I mentioned in the slide before, we will be looking at the daily files quite closely to see where the problems are, what's causing the problems, and see how we can support our members in correcting them. Over the silly season, October to December, we're going to intensify our monitoring of non-submissions. Often we find that monthly files get left behind, and we encourage all members, please submit your data. You all use different systems. If it requires you to submit that file daily, please do put processes in place. Make sure you send the files daily. If you send them too late, they cannot be loaded, especially in the festive season. Please support us. We will monitor closely where there's issues. Let your ALG member know. Let us know. We are here to support. And we will also be focusing on avoiding repeats. So we've learned lessons from last year's festive season. We'll be monitoring them closely to make sure that they don't repeat so that we can preempt them and hopefully avoid them. Our targets, as I mentioned, we'll be looking at the festive season. We will be looking at our ALG members to support them to finding out where the missing data is, because there's quite a few, as I mentioned, volatility in this environment. So often we will get a monthly file being submitted, then it's not submitted for 3 months, then it gets submitted again. That's why you also saw, as I showed you before, that disparity between the number of suppliers and the number of files coming in, other than the fact that there's more SRNs. There is a bit of a disparity there, and we do think it's because members forget or there's a connectivity issues. Please keep your ALG aware. We need to submit the data. And we will also continue sharing information with industry, showing where there are burning points, what to look out for, what you need to be concerned about. Project evolution, the compliance phase, we will be working with industry, especially on the sold debt and the prescribed debt. As I mentioned, the submission of overdrafts and mortgage pre-registration may not affect you so much, but it will in terms of when you receive the data. So start speaking to your ALG leaders now, start speaking to your primary bureaus, get in touch with them, understand what's going to come your way so that you know how to manage it in your affordabilities and it doesn't throw out your processes. Our goal, on average, we are getting about 50 million plus records. As I say, depending on the average, it's between 50, it's more towards 55 million now. We definitely saw a recovery in the terms of the volumes of submissions since COVID. There was quite a big dip, but that has started to increase again, and we're almost back to the volumes of records prior to COVID. We have managed to, through cooperation of our members and working with members, bring down our rejection percentage. Currently, there's just over 500,000 records being rejected every month. This is on average just about over 1%. A few months ago, this was above 2%. So we are really working with members and we appreciate their support and willingness to work with us. It is therefore the SACRRA's priority or our aim to decrease these rejections even lower to 0.7% on average. And this will require the support of each and every member. And also it's part of the reason why we are speaking to you today, to show you what the environment looked like, what you need to look out for, be concerned about the data, and we cannot stress the critical, the nature of how critical this data and this information is to industry. As I mentioned before, people do say that the volume of records being supplied by this industry is low. However, for us, it's an extreme priority because the volume of members submitting data is high and we are there to support. Thank you, Andrea.
If I may, thanks for that, Karika. I noticed that we do have some questions that have come in through the chat, and I just want to congratulate Margaret Jerry. You've guessed the number of credit active consumers as 26 million. You're really, really close. The NCR records it as 26.22 million. So well done, Margaret. Gold stars to you. I must just say, oh, yeah, whoopie-doo. Well done. I must also just stress for you, as Karika has mentioned, the volume of credit providers in your sector is what's relevant in terms of the impact on the data, because although the record volumes might be lower than a bank, for example, you actually, because of the volume of credit providers, are really critical. But more importantly, I think, is the nature of your products and services to consumers are far more dynamic in terms of loan cycles. So the information from the short-term lending sector is really very informative about consumers' level of indebtedness and their performance generally. And I've got another little dismal question to ask related to consumers. How many consumers have impaired records at the credit bureaus? It's really quite important to keep an eye on these stats because it does tell you how your business will be impacted. So I look forward to seeing who's got the closest count to the number of consumers with impaired records.
Daryl,
so thanks for questions coming through. Yes, Karika, please.
May I also ask a question on my presentation to see who paid attention?
Yeah.
So my little question to everybody is, it's a bit of a riddle. They say that if you want the right answer, you must ask the right question. So I want to know what is the right question. And it was throughout my presentation. So no cheating, no going back, but yeah, just a little bit of more fun there.
Cool stuff. Thanks, Karika. Without further ado, Andrea, you have the floor. Scare us, silly.
Thank you. Okay, just to continue where Karika left off is regarding the deadline on the compliance phase. So the workarounds that the bureaus assisted helping the data contributors to be compliant was like the interim solutions to allow sufficient time for everyone to do the development for the full solution. So that was for the end of data submission when you sold to third party, and then also for those accounts that are prescribed and is still in display at the bureaus. So if you look at the status table at the bottom, it's quite a concerning picture, because we've got a lot of people or entities that haven't yet started their compliance phase in their development. And we can't no longer impose on the bureaus to give an alternative for people to be compliant. So for that reason, we also proposed a deadline for the discontinuation of the interim solution processing, and that date already passed. So it's very, very important that everyone starts their development to start being compliant. The consequence is non-compliance with the NCA, which I'll also address a little bit later, and then you need to prioritize your development. For those that is using the affiliate-led groups or loan management system vendors, we got 3 entities currently in testing for the development phase, but there's still a lot of other entities that's unknown and not yet qualified whether any of these developments are applicable to them or not, and whether they should prioritize for this development. If we look at Regulation 1913, so you all seen the guideline that was published by the regulator in terms of the manner and form for your submissions in terms of credit and risk reporting to the authorized bureaus. So credit providers must submit in the L7 and version 2 data specification, and their files needs to go through the data transmission hub, which is the form of the manner in these submissions. We are aware that the NCR will publish another fee guideline, which will also include completion and onboarding dates. So the timeline could be very strict and short, so that development is pertinent. So that deadlines is not only referring to the L78 version 2, but also the addendums, which is the compliance phases. So the pressure is on to do that. We've also seen the draft version of this fee guideline that will be published soon for public comment. And it seems that the NCR will be more strict in terms of compliance notices. And there will also be, your access can be denied or suspended for a certain period if you non-comply with the payment of fees. And that will mean that you won't be able to draw down the data from the bureaus to do affordability assessments. But you will also not be liable to claim any damages when you can't do business because you can't access the bureau data. So please make sure that you make this a priority. And then furthermore, if possible, use an affiliate-led group. The fee structure is more affordable for smaller entities as long as you comply with the 50K or less number of records. We will not be reporting on that members' data quality, only on outstanding fees, 60 days or more outstanding on arrears, and then the onboarding timeline to indicate who actually came on board and are busy in the development, when they will do the testing and sign off to start live submissions. The bureaus, however, are compelled by the NCR to report on data quality, and they will do so through the CBA, the Credit Bureau Association. If we look at consumers' rights and impact on data, this is a few key issues that has been flagged and came to our attention. So obviously, you're all aware that you need to inform the consumer at least 20 business days if you intend to publish and report any adverse information on them to the bureaus. There's also the dispute process, and that links slightly to POP here, which will also require you to make sure that the information held is true, correct, and updated. So this dispute process is on the data held at bureau. It is pertinent also that you keep the relevant information, as there's a clause in the Act that requires you what information to keep, because the bureaus will ask you for credible evidence to make sure that the data that you submitted is correct and not be removed, because this can be challenged. The further thing, the longer you take within the 20-day period, is the people can't use the data in their affordability assessments because they need to withhold it. So please make sure that you do provide it within the timeline, because if you don't provide it in the timeline, that data needs to be removed. And parties that has been using within that period will then be informed not to use that data. So I want to draw your attention to some consumer education regarding the dispute process. Is available on the CBA's website. The link is provided down there. And then also to inform them that even though we're involved in the data sharing environment, we do not have access nor a mandate to remove any data at the Credit Bureau from their databases. So we've been involved in a court case where we've been named as a party in this process, which was incorrect. So that consumer education is pertinent, please. If we move quickly over to POPIA, or Personal Protection of Information, just where it relates to data submissions through the data transmission hub co-owned by SACRRA and the CBA. So we are responsible parties in terms of compliance with the Act to ensure that we have all the security processes and guidance and safety security measures in place and uphold those conditions. And we've also transferred that into an agreement with the data transmission hub service provider. We make sure that we've got the necessary security clauses, the POPIA clauses, requirements, audits, penetration testings, whatever is required on the physical as well as the digital platform. And we've got the necessary processes in place. The two co-owners will also agree jointly to any changes that is required, and we will monitor it according to requirements for that. And each credit provider and data provider that processes information through the data transmission hub, you do that according to Regulation 1913. So that will require no need to have a separate data processing agreement with SACRRA in place, because the legal purpose as defined in the Act is the compliance part that you need. And it's also not our duty to inform you or your consumers regarding your obligations. You are responsible as the responsible party for your data and what the consent you obtain, the processing of the information in whatever manner and form, what you do with the consumer information. If you use an affiliate-led group or loan management system vendor, you are still the data owner and you are still responsible for that data quality. You can't pass it on, but ensure that you've got the necessary conditions, security, and agreements in place with your service provider. In the event of a data breach, so it depends on where it happens in the process, and I'll take you through that quick just now. And the responsibility will fall on the party responsible for the breach to do the necessary investigations as required in the Act, report it to the information regulator, and whatever remedies you need to do so it doesn't happen again. This is just a schematic to show that the flow of the data that's going through, and the green parts within the blocks is just all the security that is in place in relation to POPIA, just to give you some comfort. So I want to spark a little bit on the block 1, the data contributors. So you are required to ensure that your file is encrypted before it's sending through the DTH. You're also required to have the necessary securities in place at rest in your own environment, the data that you held, and do the necessary retention, deletion, updating, or whatever requirements is it on the processing of that data. If you look at the table below, you will see you're the data owner and operator. So there I've just highlighted the authorized service provider to ensure that you've got that responsibility. You're still the operator, or you're still the data owner. Make sure that your operator that you authorize has the necessary safety precautions in place. We will have a more detailed regulatory type of slide deck that we can circulate or provide to the MFSA after. Due to the time commitment, we couldn't go through everything. So I've just highlighted some key items for your attention. Thank you.
Thank you, Andrea. Once again, any questions, please put them in the chat box. Karika is going to share us a little overview of our projects that we've got going, but we have a ton of questions coming through as well. So I just want to check, Karika, are we going to answer now or right at the end?
There's a few I can answer now, Daryl. I haven't gone through all of them yet, but I can do some of them.
Okay, let's go for some.
One of the questions that we received is how long does it take to update the information? And that is, according to the Bureau SLA, they have got 24 hours to update a daily file, and they've got 7 working days to update a monthly file. So part of my little question, which we will answer a bit later on, I do see that somebody did get it right, is to monitor these daily files to actually see if the bureaus are in SLA. Wherever it is picked up that they are not, where the data is not being loaded within 24 hours, we encourage you to speak to, if you are part of an ALG group, to them directly or raise it to the SACRRA office so that we can address it and investigate what the problems are. We receive reporting on daily files once a week, so if you do pick up an issue before that, please do let us know. Then we had another question about how often mistakes are being made in terms of the data, and I have to say that quite often, unfortunately, IT systems, things go wrong, so there's quite a few challenges within the data, but there's different types of data quality issues. So there are those that will result in a direct rejection. So for example, if you submit a loan and you don't provide the installment amount, that will be an outright rejection and that record will not get updated. However, we cannot validate that the value being submitted in that installment field is correct. So if a value is submitted as an installment and it does align with the layout requirements, we will load that information. I'm saying we, but I mean the bureaus will load that information. However, we cannot confirm that the information contained in that field is correct. That's why it's critical to check your extracts and make sure that the correct information, the correct calculations are being provided and that you report the correct installment. We had another question about who can be contacted if there's an issue with SACRRA membership and there's data issues with the updating of information. Please do get in touch. We will share our contact information after the session where you can log these type of issues. We are always willing to help and advise, and if we can't, we would try and advise you who you can contact to correct the information. We also saw a question about what the implications are for the supplier if a file is backed out at the bureau. So as Andrea just mentioned, the supplier of the data is always the responsible for the data quality. You will be held responsible for that quality. So if the backout of a file is required at the bureau, it means that the first instance was incorrect. The data quality had a challenge. We also need to consider then that you would potentially go over the SLA timelines for loading and for submitting of data, because you've got 48 hours to submit and you've got 5 working days from your billing cycle to submit your month-end files. So we would potentially cross the SLA timelines. And there's also a risk to industry, because in the process of backing out a file, some bureaus may be able to do that quicker than others. So for that period of time, there may be different data being displayed at the different bureaus as they follow their processes to actually back out that file and reload. So there is quite a potential risk for incorrect credit and risk decisions being made on that data while it's being backed out and when it's being reloaded. So that's some of the questions that I've picked up so far. We will attempt to answer the rest as we go along in the Q&A session.
Thank you, Karika.
So, yes.
Before you start your projects, I just want to congratulate Marissa H. Marissa, you're the closest. You said almost, I think you said 30% of consumers have impaired records, and yeah, that's the closest. It's actually 26%. It's 10,070,000 consumers. So of the 26,220,000 credit active consumers, 10,070,000 have impaired records. So thanks for the answer. Karika, back to you on projects. Thank you.
Thank you. Congratulations. And on that also, I just want to say congratulations to Beverly. You got the question 100% correct. And I hope I'm pronouncing this correctly. I am Afrikaans. So Trevor and Governor, you were very close in second. So congratulations on that as well. That is the question. It's, are you connected? And I will give you some more information about that just now. So the Business Credit and Risk Information Sharing Project, or BISCRI, is a project that has been going on for several years. And I personally, I am a dog lover, so I don't think they always deserve this, but I'm going to use this analogy. When SACRRA believes in the data, it must be there. It's for the benefit of our members. We are like pit bulls and we do not let go. So this project has been running for a few years. And the aim of this project is to create a database of business credit and risk information. So much the same as we have on consumers, we now want to create a database being shared by all of the current consumer hosting bureaus, as well as additional bureau, Inoxico, who will be sharing or will be holding a business credit and risk information. So our layout was finalized for this specification, and it was shared in September 2020. And also to note is the NCR approved this layout for the submission of sole proprietor data. So this may affect you if you've got do lending to sole proprietors. You can use the BISCRI layout, and we encourage you to use the BISCRI layout to submit this data. What this project also aims to do is a sole proprietor under the National Credit Act, it does fall under the consumer profile. However, we would like to start separating on that consumer profile credit granted to the consumer in his personal capacity, so a cell phone contract, for example, or a loan that was granted. He's still the owner of that debt, sole proprietor is still the consumer, it will reflect on his profile, but to actually display it separately. So in a separate block or in a separate way, to just create that distinction between when something was granted for the person in his business capacity versus in his private capacity. We've got a BISCRI brochure. It's a very exciting project. So if anybody is interested, we'll also happily share that. We currently have about 13 companies that's in various stages of onboarding. So that is either they are in development, or they are currently in testing, or they're setting up the SFTP sites to be able to share the information. And we've got about 88 prospective BISCRI members. And also, I can also Loan Info, thank them. They are one of our ALG leaders that is currently looking at the requirements for developing this BISCRI data. And we do really believe in this project because it will, if there's more information about a subject, about a company, more informed decisions can be made. So even for you in your own business capacity, if you've got a business loan with a bank, if we get more information, payment history on that, other opportunities will open up in the financial market. Other entities may come on board and say they want to offer credit or whatever products to businesses because they can actually quantify you as a business. They've got more information about you. So not only for you in terms of your submissions, but also for you as companies, as entities, this information will be critical, and we do believe it's been proven that access to information does, broaden the financial possibilities or opportunities for companies. Thank you, Andrea. Some of the other projects that we are working with or working on that may not directly affect you right now, but it will potentially in the future. One is the insurance sector focus. So we have done various workshops with the insurance industry members to understand what their needs are and what their challenges are. And one of the biggest challenges are that in the current layout as it stands, the installment value, for example, shows, it doesn't show premium. So it's not aligned with the terminology, and they get a lot of consumer disputes saying, but this is not a loan, it's not an installment, it's a premium. I don't have months in arrears, I've got a missed premium. So currently what we're working with our associate member bureaus is to, the first prize is to change the way the information is reflected to a consumer, to separate it from the normal credit information and actually show the correct terminology being used by the insurance sector. One of the other projects that we're working on is the MOA implementation. We are busy reinstating the same previous MOA with the NCR. The fee guideline will be published depending on our fees that's being finalized. The qualification of potential data contributors, we will need to undergo another assessment. So what this means is when we did the first assessment, the NCR registrant list was about 6,000 entities. At the moment, there's approximately 8,000 registrants with the NCR. We need to contact these companies, understand if they've got data to share, understand if they need data or need to be sharing data, and then start onboarding them to submit data in the relevant layout as per the requirements. As Andrea mentioned before, the reporting to the NCR will exclude data quality reporting. We can, however, do, the reporting will be handled by the bureaus, so we do encourage data quality, and we will keep you posted on developments in terms of what you need to look out for and what you need to focus on. Thank you, Andrea. So here is the question, are you connected? So I'm going to start off with some of our previous or our current tools that we've got in place, the data specification matrix. This is the layout document, so the specification. It's over 300 pages if you try to print it. What we aim to do is create an online version of that so that you can click on, for example, one field and it gives you all the rules related to that specific field. So we believe that it makes the interpretation of the layout much easier to understand and much quicker. Then one of our flagship tools as well is the data master application. So this is a little application that you install within your environment. You run it on a laptop, you run it on a server, and you run your monthly or daily file through this validation rules engine, and it gives you immediate results. So even before you submit that file to the credit bureaus, you already have the results. And I have to also congratulate and thank our ALG leaders that have been working with us. A lot of them are using the DMA. So we also have to thank them for their participation in this. But this validation rule engine does make a big difference. And then based on my question, if you want to know the answer, you have to, or if you want the right answer, you have to ask the right question. And the right question to ask in this instance is, are you connected? So I think we lost our presentation there, but basically this is SACRRA Connect, is an online portal where we will be communicating with our member base. You are welcome to get access to that, there we go, to that specific application. And what this does is it shows you your results across all 6 credit bureaus. So as a daily file gets loaded, as a monthly file gets loaded, if you access this portal, it will give you the weekly reports as received from the credit bureau. And sorry, you can immediately see what went wrong or what went right with that file. There is out of SLA calculations as well, so you can determine for yourself, you can take charge, can take control, sorry, and also see how your data is performing. We've got 6 different bureaus. They do apply various validation rules. So if, for example, one bureau has got a rejection percentage of 90% and the others have got 0.9%, there is a problem and we need to address it. That's typically where the SACRRA gets involved, where we provide support and guidance. We engage with the bureau to understand what rejection was triggered, what the rule is, because it could be that that one bureau is correct and the others are incorrect. So we work very closely with them, and SACRRA Connect is a very powerful tool, gives you insight into your data, and we encourage you to contact us, get connected, get onto SACRRA Connect. We are expanding this portal and a lot of information on data, data quality, the importance, regulatory implications as it relates to the data will be shared there. So we are quite excited. You can see in the unsecured industry, we already have 2,609 members that have signed up. That's entities. That amounts to all of our users is 11,000 users have already registered on this SACRRA Connect portal. So don't get left behind. Get the answers, get connected. Thank you. Thank you.
Great, thank you very much for the presentation. So I think it was very informative. I think the information that was shared is crucial. I really like that portal that you are talking about. We are going to go into questions and answers now. So if you have any questions, please post them in the chat box now, and then we will direct them to the SACRRA team. So I don't know if you've seen Fari's question. What is the process to get connected to SACRRA Connect if we submit via an ALG? Daryl?
Sorry, Leona, I missed that one. I missed that question.
What is the process to get connected to SACRRA Connect if we submit via an ALG?
Okay, so we will be sharing after this the email address where you can send your information with the information that you need to send. We will then get you registered. You will get a link from SACRRA Connect where you can click on and then register as a user and get connected.
Right. Is there any additional questions? Okay. Who is responsible for submitting of the file to SACRRA? Is the credit provider or loan management system responsible? Back to you.
Okay, so I think I'll take that one as well, Daryl, Andrew, if you don't mind. So the responsibility of the data and the quality remains that of the data contributor. So even though you may use an ALG or a system or anybody else, the ultimate responsibility begins and ends with you. That's why we encourage every single credit provider to take responsibility for their data, keep an eye on it, engage with your ALG if you've got any issues, and be aware of where your responsibility lies, because you will be held accountable even if you use a supplier.
Yes, I think it's with any compliance requirement, even though you
Perfect.
use a system or administration system.
Bye. Bye.
It's your responsibility to make sure that you are compliant and that you submit your information to the NCR, and in this case, submit your data.
Absolutely.
Leonie, could I just add to that?
You can, yes.
Thank you. If you're a registered credit provider, you're required under the National Credit Act to do so. If you're not a registered credit provider, but you access credit information from a bureau to use it in your business, in the normal course of your business, then you have to, you're required to reciprocate by sharing your information. And that is under Regulation 1913, the reciprocity arrangement. And the bureaus are appointed by the NCR to make sure that parties who are not submitting may not access. So it's really important that information ownership is recognized and the responsibility related to that is also recognized. Thanks, Leonie.
Right. Yes, I think we did receive a question from Nicole. I think, Nicole, this is something that you should possibly discuss with SACRRA directly and with that specific service provider. It's difficult to name service providers here and say you've got a specific problem with a service provider. So I think it's something that you should take up with that company and with Daryl and her team. Right.
Very happy to engage offline.
Yes. Any additional questions? Let's see. Okay, if there's nothing in addition, Daryl and Karika and Andrea, would you like to do any closing remarks? Okay, wait, here comes something. Some problems, written off. What does that mean? Because some accounts written off but show payments made after written off or shows outstanding balance. Number 2, overdue amount. If the client missed or fall behind in payments, some accounts take the total outstanding amount and put it as outstanding. So back to you guys.
So
I'm going to ask Karika to handle that.
Okay. So written off is one of those problematic status codes that we do have because there's such a variance in the interpretation of it. Written off is supposed to be, it's not a financial write-off. You're still going to collect on it. You're still going to sell it. A write-off according to the layout means you are done with that account. So there shouldn't be any collecting afterwards. It's written off, it's dead to you, you are not going to sell it, it's done. However, we do see a lot of people in industry using it incorrectly. So they will write it off, do a financial write-off, it goes to the collections department, but they still collect on it. That is why you will see some of these financial updates coming through periodically as they get payments. So we're working very hard to change the industry in terms of the use and the understanding of it. But it does still pose a challenge, especially because the adverse gets removed after 1 year in display. So that record will then remain in display for a potential another year or 2 years, depending which bureau you use, without the adverse status code of the W. And Leonie, sorry, I missed that second question. Oh, did I lose Leonie now as well? Let me just see if I can see it.
Caroline, it's
Yes.
it's from Norman. Has there been a definite answer whether companies who grant staff loans with interest should register with SACRRA? So if I can answer that, so obviously if you're a registered credit provider and staff loans are going to individuals, you need to submit that data under Regulation 1913. So voluntary membership for SACRRA, and you can also join under Regulation 1930 as a non-member. But again, all the tools that Karika mentioned will help your data quality, so it's better to become a SACRRA member. The fees that will be prescribed will be similar for both, but the benefits on the long term with a membership can be explored. Thank you.
Great. Yes, sorry for falling off there, guys. We had a problem with our internet. Is there any additional questions? Okay, let's see. If an opposition branch do not send any data to the Bureau, can and how do we report them? Okay.
Sorry, I missed that one again, Leonie.
If an opposition branch do not send any data to the Bureau, can and how do we report them?
I would encourage you to either report it to your ALG leader. We will engage to SACRRA, or you can report it to SACRRA directly. We will engage to see who's involved, who the party is, and if we do see data coming through and what is happening.
Okay, right.
Because we do not want to go directly to the regulator. We would rather try and engage industry to try and resolve it internally.
Yes, yes.
But it is the prerogative, sorry, Leonie, it is the prerogative of the party who has noticed that there's data missing. They could go to the NCR if they wanted to. We just try to work with our members more cooperatively, and hence the answer of we try to do it in-house as opposed to go in the legal route. But it is the choice of the party who has noticed the challenge.
Okay, great, right. Yes, then another question in when does data become historical and how can it be amended?
So
Nice one,
data becomes historical the moment there's a more recent update. And historical data, I'm not sure what is referred to or what specifically with historical data, but data gets reflected at the Bureau. They can retain it for 5 years. So they can also display 5 years worth of data if they choose to do so. Most bureaus have got a display period between 24 months and 36 months. If it's historical data, for example, a QE1 record that is sitting there that hasn't been updated for 12 months, we've got processes in place, ad hoc processes, where we then get a file from the data contributor, we submit it to the bureaus with a specific instruction to say, amend these old records, and this is the information that you need to amend them with. So I hope that that answered that question.
Right, right, yes. Is there any additional questions that you guys have? I think, yeah, let's go to closing comments. And Daryl, from you and your team, yeah, let's take it. Let's start with Andrea.
Sure. I don't have anything to add. I noticed there are a few additional questions. We will just answer them with Leonie, and then she can be circulated to everyone. Thank you for your contributions, for your questions and interest. Thank you.
Karika, from your side.
From my side, I just thank you for the opportunity. Thank you for listening. There is so much about the data that we would want to share, and but our time is limited. So if you've got any questions, any engagement, speak to your ALGs. We will do contact sessions if we have to. We're willing to share. Speak to the MFSA. Data is a big world, and we are, as you can see, very passionate about it and willing to share. And thank you for your time.
Right. Thank you. Daryl, over to you.
Thank you, Leonie. Well, first of all, thank you to yourself, Henny, and the rest of your team who've made this morning possible. And thank you to your members for making the time to join us today. I really hope that it's been informative and useful. And I'm very keen to hear what else your members might like to hear from us in terms of, you know, the data story. And in closing, I have one last question, which is, do you know what the SACRRA slogan is? Hopefully you do, but if you don't, it'll be in the answers that Andrea will send off to Leonie. Thank you so much for the participation. It's been great. And thank you again to the MFSA team. Thanks, Leonie.
Thank you very much, guys. And what we are going to do now is we are going to put a link into the chat box. If you can just fill in and complete the survey, we would really appreciate that, just to see, you know, what you think about the session and if you want more sessions like this in the future. We also want to thank you guys for attending. We really do appreciate it. And thank you for Daryl and the team for sharing the information. We really do hope to see you in our future sessions. So have a great day, everyone. And it's almost weekend. Thank you.
Thanks. Bye, everyone.
Bye.